It's Clay Trader, and this will be a video chart on the S&P 500 index. We have been tracking this one along with the Dow Jones, kind of hopping back and forth. But finally had a pullback here, and once again this trend line knocked us back down. If you followed some of our previous videos, whether it be on the S&P 500 or the Dow Jones, you saw that we drew this trend line based on these areas here, and you can see it's been doing just a almost scary job of forecasting where these areas of resistance would be. Like I say in a lot of videos, resistances and supports are not exact, specific, literal price levels. They are zones. So sure, here you got above it a little bit, but you never really pulled away. It was always within that zone. Same with here, you had some breaks above it and so forth, but never really just popped above it and pulled away. And sure enough, these past 3 days, especially today, the trend line has knocked us back down again. So this zone is really being a pain. Now, the one positive thing about the zone is that it is a dynamic one and it's sloping upwards, which means as time increases, this zone goes higher and higher. So here it knocked us down, but at the same time we were still able to make a higher high, which is good. But at the other side of the spectrum, we're kind of putting in some negative divergences and so forth, which I'll talk about later. But overall, the trend line has, without question, knocked us down. So now it's more of kind of figure out where the support levels and so forth might be on any of these pullbacks. First area we'll just kind of, I should change this to red since it is our resistance trend line, so let me do that. And I also note, just if there is some sort of all of a sudden recovery and it bounces back up, besides this trend line here, we also have this area right here about we'll just call it about 1020, which is also going to be another little kind of blip on the map type resistance level. But now for support levels, where are supports at? Well, the first one that I see is formed from a previous low and high. So right here you can see that we came up here, struggled a little bit, and finally pulled away from that area. So that's where this resistance became a support, and then later on came down here and bounced right off this area. So this is where this support was confirmed as being a support. This level here is right around, we'll call it 975. So this is going to be our first key support level if the S&P so chooses to keep falling downwards. Our other support level that we have, which is a dynamic one, meaning it's moving, is right here. Our friend, the 50-day simple moving average. Right now it is valued at 965. One thing to keep in mind is that each day that goes by, this level will change. It won't change much since it's taking 50 days into account. However, this isn't going to remain 965 for the next 2 weeks. It will be changing. But these are going to be our two support levels. Now let's say this one fails and this one fails. What's the level that I really don't want to see fail at all? Well, hopefully, and like I said, this is the level that I think is pretty important and I don't want to see get broken, but is this 950 level. If you look back to this area of the chart, you can see that it was a hefty little resistance level, and this level really knocked us back down quite a bit. However, when we did get above it, as you can see right here, the chart has taken off. So this is what I'm calling a pretty important resistance level, and I'm going to make that line thicker just to remind us that that is a level where we really need to see it hold. If this one doesn't hold, then that's where I'm not going to say a complete reversal in the market, because that's not what I think would happen. But if this one doesn't hold and it fails, then that's where something there could be a prolonged little pullback here, and might be entering into some sideways action where it could possibly drop all the way down to this level down here. So I don't want to get too far ahead of ourselves. Let's just see how this acts the rest of the week. But these are 1 and 2 are two support levels that we're really going to want to keep a closer eye on. Breaking it down to more of the 60-minute level, you can see kind of more of a clear and concise of what happened. Had the nice move up and then totally just went sideways, and then today was finally the day that broke down through this sideways channel. These lines weren't that good. If I was more accurate, I'd drawn the lower channel line was here, the upper one was up here, and then today, as I mentioned, we finally broke down through there, and are now consolidating. So very possible we could pull down here to this 980 area. As you can see, that is where another area of support is. But for the time being, hopefully we'll just level off here and then head back up. Weekly chart, which may be kind of pointless to look at right now just because we've only had 2 days and there's still 3 days left for this candle to change. But not counting today or this week so far, you can see that once again the weekly chart is right up against this trend line also. So right now it is bouncing back off of it, and that's kind of where we stand right now. Ideally, I wouldn't mind seeing a few weeks of just sideways action before making another push up, hopefully over 1100. Sideways action, pullbacks, proof is in the pudding. This pullback here that occurred over about a month ended up being very healthy for the chart. So some sideways action or pullbacks, that's why I'm saying that if it pulls back, I'm not saying it's the end of the world, because pullback and sideways action is healthy for a chart, but it's those short-term players that kind of freak out, and the people on CNBC where they can try to imply that after a few weeks of sideways or pullback that the world's coming to an end again. But until certain things happen, which we're not even close to, one being a break and close below this low down there, I wouldn't really freak out too much and worry about what the people are saying on TV until you actually see some things happen and follow through. So once again, this was the S&P 500. If you have any questions, please shoot me a message. I'd also encourage you to go to bullmarketnewsletter.net. If you sign up for the newsletter, you will be sent a free ebook, which has been getting good reviews, and then you'll also begin to receive our newsletters. We don't send them out, 15 a day or anything like that. Usually 1, 2, or 3 a week at most. And with those, you'll get chart setups and articles on things, and we cover everything from small caps to big boards. We'll have trading ideas, investment ideas, and we've been doing real well on those. Our most recent one made our people about 40%, and the one before that was about a 75% gainer, and we've had some other successful ones. So it's worth checking out, no strings attached. It is all free. So hopefully we'll, if anything, see a bounce off this level, but only time will tell, and we'll see what the chart does the rest of this week. Thanks for listening, and have a good one.